Taking a look at the energy markets today, I want to focus on WTI. Boy, WTI, another significant down move. We continue to see the selling pressure building on itself. We saw WTI down about 3.5% today. We saw WTI have a very significant range, I should say, and we're settling right around the 51.68 level, high of 53.41, a low of 50.60, 50 spots 60. So we did see WTI intraday break below the $51 a barrel mark. Once again, we see the significant selling pressure as the markets kind of digest some of the dynamics. And I think when you look at also the underlying characteristics of this move, you got to focus on the volumes also here, because we're seeing a big pickup in volumes, not only in the futures markets, but in the options markets as well. So that's another dynamic, I think, is playing into this momentum to the downside. The data today was the big mover. I think EIA number came out much larger than expected. We already had a fragile market coming into this morning's announcement. 6.8 million barrel build, expectations for a little bit of a draw this week. So that dynamic really increased the selling pressure on WTI as we move through the day, pushing us down to these levels that WTI hasn't really experienced since early January. We're getting down to levels that WTI just hasn't experienced since the early part of the year. And I think, again, as we see some of the concerns play out in this marketplace, you got to focus on the economic structure. And if you look at the economy, the slowing pace of the U.S. economy, certainly in the manufacturing, slowing down somewhat. Globally, it's slowing down. So that's playing into the supply/demand narrative within the WTI space. So I think that's something that the market's still trying to account for, and that's putting some downward pressure. We did have some Fed officials this morning also indicate that they might opt to move sooner with a potential rate cut, and couple that with a weak employment number this morning. I think all those factors played into this weakness that we saw in the WTI and crude space. One thing I really want to point out, though, before I close, is the very interesting factor that we're losing this correlation, at least for the short term. Typically, we see crude and the equity markets kind of move together. We're seeing that correlation break down right now. And again, I think it's because the equity market is getting a boost from the fact that the Fed might be slowing or actually moving towards a rate cut. But nonetheless, the demand that the WTI and crude had built in, I think it's also the factor why we're seeing the decoupling here, where WTI down quite significantly today, while we're seeing the equity markets rally.